Good afternoon, friends. Another important video and topic is very interesting. What is ISD, Input Service Distributor, versus cross charge? And cross charge is nothing but supply of goods or services between distinct person or related person in the course of furtherance of business, even without consideration. Entry 2, Schedule 1, deemed supply in GST. But we all are struggling with when ISD applicable, when cross-charge applicable, and in cross-charge we are having different doubt. Doubt number one, where recipient is entitled for full ITC. What would be the valuation? Whether that valuation can be followed as per second proviso of Rule 28 CGST rules, that would be deemed open market value. Whether salary cost of employee concerned need to be included, where full ITC is available to the recipient unit. What happens if it is full ITC not available to the recipient unit? Then whether salary costs need to be included in valuation for the chargeability of GST for cross-charge. Entry 2, Schedule 1. We are going to discuss all these components, and a circular number 199, dated 17 July 2023 got issued. I'm going to discuss some more component with the circular, which is very much relevant for related party transaction. So listen carefully. Before that, let me share my screen and share that particular circular, which I'm going to discuss with all of you. This is the circular which we are referring, circular number 199. And what it is clarifying, come to para 2. A business entity which has head office, let's say in Delhi, located in state 1, Delhi, and branch offices located in other state. So they may have 4 branch offices in 4 different states. Then quite obvious, even under same PAN number, we need to have separate registration under the GST law, and we become distinct person. HO in Delhi procures some input services. Example they have given, this is only by way of an example, there may be lot many input services, common input services, like security services for entire organization, full company, from a security agency, third party. So that you are procuring. HO also provides, so there are 2 situations. One is when HO is procuring common input services for full organization, and second situation, HO also provides some other services on their own to branch offices, and they are defining it as a internally generated services. So this is not third party services, it is internally generated services. So of course, first we need to understand the meaning of ISD versus internally generated services. ISD is what? HO is procuring certain common input services which is related and which is used by branch offices in 4 different states, including HO. So here only procured and used by HO and other branches. So it is not internally generated services. So ISD concept is known from service tax era. That common input services, GST charged by third party, of which credit is availed by HO in the capacity of ISD input service distributor, provided registered as ISD, and then distributed this credit to all the recipient unit in that predefined formula. Now, what we have seen in GST regime, there was confusion and interchangeable ISD versus cross charge. Some of the business entity used to raise tax invoice pertaining to this common input services procured from third party, availing credit and then raising tax invoice to the branch offices. So they have not taken ISD registration. So dispute was, since these ISD and cross-charge are two distinct concepts. In cross-charge, internally generated services given by HO to the branches. So there is element of service. That is the reason we are talking, it is entry 2, schedule 1, supply of services between distinct person in the course of furtherance of business, even without consideration. Valuation was a dispute. When recipient entitled for 100% ITC, when recipient is not entitled to. On top of it, the problem is lot of business entity has not followed even cross charge. They have not raised any invoice for internally generated services. So what happened for the past period? And this may be a situation where recipient is entitled for full ITC and where recipient is not entitled for full ITC because they are into exempted sector like education, healthcare. And then on top of it, the dispute of salary inclusion, salary paid to the CEO, CFO, common HR, accounts, IT teams working at head office level, where the salary need to be included. So this circular number 199 is providing a broad clarity. And let me discuss this circular one by one, and then I will also give my input and value addition. That how we can read this circular, in what context, and what are the open points still left out, which could have been clarified. Let's start with point number 1. So look at the issue. And since this circular is providing clarity, issue, and clarification, I'm also sharing this circular so that we all can read and understand, digest on same page. That is the only objective. Whether HO, head office in Delhi, can avail ITC in respect of common input services procured from third party. That is the security services in the example, but attributable to both HO and branch offices. Or exclusively, sometime it is being procured, which is related to one or more branch offices. Whether HO can issue tax invoice under section 31, which is a normal scenario, to the said branch office for the said input services, and branch offices can then avail the ITC for same, or whether is it mandatory for HO to follow the ISD mechanism, input service distributor, for distribution of ITC in respect of common ITC procured by HO from a third party, but attributable to both HO and branch offices, or exclusively to one or more branch offices. So issue H, whenever you are procuring common input services from a third party, do we require to compulsorily, mandatorily follow ISD registration and thereby distribution of credit? This is the issue. Let's look at the answer now so that we get little more clarity. What they are saying, and this is worth noticing, it is clarified that in respect of common input services procured by HO from a third party, but attributable to both HO and branch offices, or exclusively to one or more branch offices, HO has an option. Read carefully. HO has an option to distribute ITC. Option means it was not compulsory, right? That is what the meaning coming out. Distribute ITC in respect of such common input services by following ISD mechanism laid down in section 20 of CGST Act, read with rule 39 of CGST rules. So having option looks like it was not mandatory. Listen further and read along with me. However, as per present provision of the CGST Act and rules, it is not mandatory. First time ever after 6 years of GST introduced, this clarification coming out, and clarification is saying that however, as per the present provision of CGST Act and rules, it is not mandatory for the HO to distribute such ITC by ISD mechanism. Means they are saying as per CGST Act and rules, it was not mandatory. ISD registration was not mandatory. Then can I raise tax invoice on branch office for passing on this credit if I have not taken ISD registration, and that is being done by so many companies, so many business entity? They would be looking for the answer here. Read carefully. HO can also issue tax invoices, can also issue. So if you have not taken ISD registration and you have raised the tax invoice, balle, can issue tax invoice under section 31 to the concerned branch offices in respect of common input services procured from a third party by HO, but attributable to the said branch office, and branch office can avail ITC on same subject to the provision of section 16 and 17 of CGST Act. So very clear, if you have not taken ISD registration, no problem. You can always raise tax invoice and pass on the credit as if these services are meant and attributable to the branch offices. But let me clarify one thing. ISD, there's a mechanism of only credit on common input services. You can't distribute the credit on input and capital goods when ISD registration. But when you talk about cross charge, raising normal invoice under section 31, there is no such bar. There may be credit pertaining to input service and capital goods, and that is being considered used or intended to be used in the course of furtherance of business. Hence, you're raising tax invoice to your branch officers, and then you have passed on the credit even on input and capital goods along with input services. So these are two different concepts, but circular is saying ISD was not compulsorily options. Nevertheless, what further they are saying, is it going to be mandatorily way forward? Read it. In case HO distribute or wishes to distribute ITC to branch office with in respect of such common input services, security services in the example, through ISD mechanism, HO is required to get itself registered mandatorily as an ISD in accordance with section 24 Roman 8 of CGST Act. They need to be mandatorily registered. Further, such distribution of ITC in respect of common input services procured from third party can be made by HO to the branch office through ISD mechanism only if said input services are attributable to the said branch office or have been actually been provided to the said branch office. So this is what they are saying. If you are procuring certain common input services as an HO, which is attributable to the branch officers, you should get ISD registration done. Then they are clarifying. Similarly, HO can issue tax invoices under section 31 to the concerned branch offices in respect of any input services procured by HO from a third party for and on behalf of the branch office. So only distinction they are creating. In case of ISD, it is common input services, then ISD registration. But in case you are procuring certain input services at HO, and that is only for or on behalf of branch office, that is not common input service. So distinction, I hope you must have understood it. Common input, commonly attributable, ISD registration. But if you are procuring any input service for or on behalf of any particular branch, then you can follow normal method, availing credit and raising tax invoice under section 31. That is what the distinction and differentiation they have created. So whatever you have done in the past, you may leave it, but henceforth this clarity they have provided pertaining to ISD. Now coming to cross charge. And cross charge, again, two category where recipient is entitled. Branch office is entitled for full ITC. So question which is there before us, when full ITC is available, what is the relevance of second proviso rule 28? And what is that second proviso rule 28 says? That supplier can pick up any value, and that would be considered and deemed as open market value and should not be disputed, and then subsequently disputed on a ground salary cost to be included or not. Hope clear. Rule 28 saying open market value, like kind and quality, 110% cost of provision, residue method. In addition to that, there are two proviso. Proviso 1 talking about 90% of sell price of goods of recipient unit can be picked up by supplier of goods. distinct person. And second proviso was interesting, for which we all are debating and disputing. Clarity. Second proviso is saying, if my recipient is entitled for 100% ITC, then I can pick up any value. It can be even rupee 1. Why department is litigating and disputing? Am I right? Department is saying, no, it should be at arm's length. You should consider total overhead, total cost. You should also add salary cost in the total cost. And then you should pick up 110% and then raise the invoice to the recipient unit. Then we were saying, what is the relevance of the second proviso then? And many webinar and seminar we have discussed. It's a revenue neutral situation. Supplier picking up any value, recipient getting that much of credit in its hand. To that extent, credit is moving from one state to another state, but ultimately on the basis of consumption, recipient unit need to discharge GST liability. If credit is not available, he will pay through cash. Revenue neutral situation. But now clarity. What they're saying, listen very carefully. And it is a really laudable one. I must say laudable one. So with reference to second proviso, Rule 28. What they are saying, accordingly, in respect of supply of services by HO to the branch office, the value of said supply of services declared in the invoice by HO shall, word use shall, be deemed to be open market value of such services. If recipient branch office is eligible for full ITC, so departments should not dispute. And they have raised so many so-called notices, right? This clarification circular applicable retrospectively, because any circular which is clarificatory in nature, even applicable for the past period, if you have got the so-called notice or adjudication order against you, it is going to help you even in your appellate mechanism for the past period. Whatever value you have picked up, that would be deemed open market value, provided recipient is entitled for full ITC. This is the first point. Second point. Accordingly, where full ITC is available to the branch office, the value declared on the invoice by HO to the said branch office shall be deemed to be open market value irrespective of fact. Please, I've colored. Irrespective of fact, whether cost of any particular component of such service like employee cost has been included or not in value of the services in the invoice. So it is not compulsory, and department field formation should not stress that salary costs need to be included in overall total cost. Whether included or not included does not matter. Any value picked up by supplier HO to branch would be deemed open market value. Laudable one. Read further. Further, in such case, where full ITC is available to the recipient, and worth noticing, maybe for the past period, you may not have raised any invoice for cross charge, but recipient was otherwise eligible for full ITC. A great advantage coming to your way. Read this. Further, in such cases where full ITC is available to the recipient, if HO has not issued in the past a tax invoice to the branch office in respect of particular service being rendered by HO to the said branch office, the value of such services shall be deemed to be declared as nil. Oh, Are you recalling Rule 32, Sub-Rule 7 of CGST rule, whereby this power is being given, where recipient is entitled for full ITC, this value can be declared as a nil. If value is declared as a nil by HO2 branch, and that would be deemed as open market value, I said it's a revenue neutral transaction, then all litigation pertaining to past will go away. Being clarificatory in nature, applicable even for the past period. Subtle legal jurisprudence. If you have not raised the invoice for cross-charge for the past period, value shall be declared, value should be deemed as nil. That's what it is coming out. Advantage to many business entity where they have not raised the tax invoice by HO to the branches. Only thing, recipient is entitled for full ITC. Now, next question will come, what happened for the exempted sector, where recipient is not entitled for full ITC, like education sector, like healthcare. Question would be, can we apply second proviso Rule 28? Answer is no. Second question will come, do I require to include salary cost in my total overhead for raising cross-charge invoice where recipient is not entitled for ITC, being exempted sector? Columbia Asia Hospital, AAAR, Cummins India Limited, AAAR, lot of divergent advanced ruling. But this circular is giving a clarity and giving advantage to all of us. Read it, the clarification. In respect of internally generated services provided by HO2 branch office, cost of salary of employee of the HO, should not be included, right? Read it. Involved in providing the said services to the branch office is not mandatorily required to be included. 6 years of GST, laudable clarification, and GST Council must be appreciated. Salary cost need not be included. So double whammy part gone. While computing the taxable value of supply of such services, even in cases where full ITC is not available to the concerned branch office, so salary cost need not be included. Now, this is what the circular is clarifying. I got certain points to share and discuss with all of you. My first point, there are so many transaction, related party transaction. One is corporate guarantee. Are you recalling? If holding company giving guarantee or director giving guarantee, personal guarantee to the bank for extending loan to the subsidiary company under a group, is it deemed supply of service? Am I right? Of course, entry 2, schedule 1, supply of services between distinct person or related person in the course of furtherance of business without consideration is a deemed supply. Dispute. But you can draw the advantage with this circular. Valuation, what they're saying, if recipient is entitled for full ITC, please, you can pick up any value and that would be deemed as open market value and should not be disputed by the department. So maybe 100 crore rupees loan, subsidy is getting on guarantee given by holding company or director. Any value, rupee 1, can be considered for raising tax invoice towards this deemed supply. So this is a great advantage for all related party transaction. So this circular is applicable pari materia for entry 2 and schedule 1, any kind of related party transaction. Second provision of Rule 28 clarified, a great clarification. Could have been there are certain other costs, sometime depreciation, finance cost. See, where recipient is entitled, I'm sure no problem. Now this is clarifying this position. But where recipient is not entitled, they are only saying salary cost need not be included. Good one. But they are not clarifying, do we require to include depreciation cost or any finance cost in overall value for raising invoice by HO to branches where recipient is not entitled for full ITC. So maybe this clarification is required. Coming to the next component, and which is again interesting one. Circular number 196. They have clarified now. Shares of subsidiary company held by holding company, holding of shares of subsidiary company by holding company, parent company, is not a supply of service. It is neither a supply of goods or services because securities are being excluded from the definition of goods or services. Goods is defined under section 2, subsection 52. Services are being defined under section 2, subsection 102 of CGST Act. A clarity given, not a supply of service, and shares are being defined under section 2, subsection H of Securities Regulation Act 1956. And that is what we have to see, that it is not a supply of service. No GST leviable. It is being clarified. So I have clarified both the circular number 199 and 196. Related party transaction, valuation, where recipient entitled and recipient not entitled for ITC, difference of ISD versus cross charge. ISD were common input services, where only input service procured, which is attributable to the branches, you can follow the normal mechanism. So let's have this clarity. This circular is clarifying lot many position, and take this circular for our advantage. So this video I'm summing up here. Thanks for watching. Stay tuned, because lot many clarification provided in the context of recommendation made by GST Council in their 50th GST Council meeting. Stay tuned. Thanks for watching. Put your comment in comment box. Let be active throughout. I'm trying my best to make GST good and simple tax. Looking forward from each and a few. If you are liking my videos, of course, you can share with your professional colleagues, client, so many, even to the department. And that is how we all can contribute and make GST good and simple tax. Thank you. Thank you very much.